Hey, this is Matt from InvestiQuant. Today is Wednesday, September 23rd, 2020. And before I get started, I just wanted to give you another reminder that tomorrow we are hosting a webinar at InvestiQuant where we'll be looking at this platform that I use on a daily basis here to share some studies with you. We'll show you how you can use it on your own, how you can get access to it, and some cool ways that you can incorporate it into your trading routine. So that is available at InvestiQuant.com/webinar. There is also a link below the video here on YouTube that you can click to register for it. And that'll be tomorrow at 4:30 p.m. Eastern Time, so after the close on Thursday. All right, let's hop into a study. So yesterday we saw the markets get a little bit of follow through on that reversal-like pattern that we saw setting up, and we ended up closing higher. We're still in a weak bullish environment, but we ended up gapping up. We tested down near the prior day's close, a little bit beyond it before buyers started stepping in and pushing higher the rest of the day. And that's the type of pattern that I want to be looking at this morning. So I'm going to go into Discover and we're going to look at all four instruments. And we are going to look at a setup based upon entering long at the open of regular trading hours, exiting at the close of regular trading hours. In the opening filters, I'm not sure exactly where we're going to open at, but this morning this pattern does change a little bit depending on the opening area. It gets a little bit better with the gap above the prior day high than within the prior day range, but we're going to just use a simple gap up. So I'm just going to click here on gap up. That'll include all samples, and then when we get closer to the open, I'd encourage you to come in here and check out the differences depending on where exactly we are opening. Now in the price pattern section, this is where I can describe the pattern that we saw yesterday where we gapped up and filled the gap, which just means we tested down to the prior day's closing price, and then we ended up closing higher. So it was a day that opened higher, pushed lower, and then closed above the prior day's closing price still. So to add that, I'm going to use this handy new feature that we just added to the platform where I can just go up to the active today section and look at things that are true for today. And I can just click higher close. So if I click that over there, and then in the prior gap section, yesterday was day after an up gap that filled. So if I just click on that, they instantly add to the header section. You can see they also added here in the boxes, which is the other way I could add those. But those are true. And then I can go into the indicators and I can say we are below a 10-day moving average and we are above a 200-day moving average. That creates a weak bullish environment. Then I can click view results. And here we go. So these are the results of going long at the open if gapping up after a higher close that was an up gap that filled, this taking place in a weak bullish environment. Historically, we've got 78 samples in the S&P dating back to 2003. The NASDAQ has done this 88 times, the Dow 79 times, and the Russell 89 times. The win rates on all four of these instruments are coming in north of 60%, so a little bit stronger pattern here historically. The S&P 64%, the NASDAQ 63%, the Dow the strongest at 67%, and the Russell at 62%. So fairly strong win rates there for all four instruments. And let's go ahead and take a look at the results distribution here for the S&P. You can see here the results distribution is based upon the trade counts. So the taller the bar, the more trade counts that have happened for that result. And the results are here on the bottom. The further to the extremes, the bigger the moves. Green bars are positive days, red bars are negative days. You can see the blue background is one standard deviation from the average trade. So it looks like the normal results here fall somewhere around minus 14 points and plus about 18 points or so on the upside. They both have some outliers that look fairly similar in size, but the average trade here is just to the right of zero, so average trade is a winner, and it does look like the most common trade is about plus 10 points. But historically, this has been a bit of a bullish pattern. So hopefully you found that helpful. Good luck, and we will see you next time.